So that's where we're at today. Here are some challenges in the new market. What is good for a mortgage broker, I ask you, and bad for a realtor? 156,000 new licensees. So you have a lot of competition out there. I believe there's 1.5 million realtors to sell those 1 million homes. Mortgages, of course, are more expensive. Housing payments are more expensive. Some people say they buy the payment, not the house. So, if your rate doubles, your payment doubled in the last 90 days. And so then in turn leads to a declining listing average. I don't know in the Bay Area, we've seen it that much, but in the United States, there is a decline compared to the year prior of homes. Now, identifying where your revenue is coming from in this market, I'm going to go over five different pillars that are going to be active in the next 9 to 18 months that you should be focusing on. This is no big secret. Always focus on the first time home buyer, right? Why? They're life sensitive. It's also a happy time of your life. We need to focus on that stuff, having kids, getting married, buying homes, things like that. So, of course, this is a life sensitive market. You'll see that this is common with most of these. They are mostly millennial. Big surprise, Garrick. I didn't know that. I know, but know that they are 41 years or younger, and Gen X is far behind as a distant second as far as first-time home buyers are concerned. And know this though, 50% of the mortgage requests from Lending Tree were from applicants over 50%, 23 to age 38 and a half. So there is that is the demographic. Over 50% of the people buying homes with a loan, I should say, right now. Marketing considerations of so know that millennials use agents. 90% of them here. It's broken down in older and younger, but 90% use agents. Like a lot of media makes it sound like millennials just go on their phone and buy a home, right, with whatever agent is on Zillow or whatever the case may be, but they do use agents. Of course, they are online. Your marketing strategies need to be online. Handing out flyers in an open house isn't going to do a whole lot for you, but you can shoot them your V card on your phone at an open house, right? So things like that really make a difference for you in this day and age. Use technology, 3D tours. You should have, I mean, in my operations, I try to have the most state of the art technology so that I can give everything to everyone and it looks good right away. So you should really focus on that. It's not a big surprise that millennials are on social media, I know, but did you know only 44% report daily? Only. You might think it was higher. But they are on social media. As far as your technology, your online, your social media, you need to be educational. I like to say you need to be evergreen, right? Video and content and whatever that is not specific to today, but like 5 tips for starting the home buying process. Information like that. Instagram, YouTube, TikTok, I'd say are the big ones. Um, and very much so TikTok. I just want to throw out. I have a lady I know in the mortgage world that does a video a day about credit repair, and she is just crushing it. So, like the tip of the day for the first time home buyer, I think is a great concept on TikTok, where it's just like 20-second video. Did you know that when you write an offer, you need to have a deposit ready? It could be 3% of the contract price. So make sure you have that ready. I'm Garrick Wordmuller. Give me a call, whatever the case may be, right? Um, and helping understand the process really 70% of older and younger millennials stated that that was the most extremely beneficial from a person, not from a website or from a phone, right, but just getting education from a person, realtor, lender, etc., about the process. And I thought this was pretty interesting too. Over half of the younger millennials found their agent through a friend, neighbor, or relative. So referrals are still king. They can go online and find anyone they want on Redfin, Zillow, and all these big websites. But at the end of the day, they are asking, like, who do you trust? Right. And at the end of the day, that's who we need to be. Moving on, after you get married, have those kids, and buy that home, right? Divorce is up quite a bit due to the pandemic. So a loss of social interactions is very sad. I was being a little sarcastic with that last comment, but just know stress of homeschooling kids, working from home. I mean, everyone's aware of these struggles, right? has resulted in a huge divorce, up 34% in 1 year from 19 to 2020, and those have just gone up. And 31% of couples cited lockdown. So, like, one third of people are getting divorced because of the lockdown. Like, that's just incredible. Um, One third of divorced couples, the reason why is the lockdown, I should specify. And 20% were married for less than 6 months. So to market these people, I'd say first and foremost, know that you have two people, right? That, like, this is might be a little bit of a generalization, but we kind of know this is might be happening. These two people probably hate each other. They want to get as much money as they can out of each other. And you have the responsibility of selling their greatest asset. And so you need to be a diplomat and you need to be Switzerland. And they both have attorneys. And you need to be best friends with those attorneys too, because that's a future referral source for you. So I'd say that's the biggest consideration is communication in mastering these. As far as marketing to them, one, I'd say there's two really good ways, right? Data. So compiling public records on divorce filings, marriage quitclaim deeds, etc. You can get a cold call of potential prospect lists and start a mailing campaign. You can even like skip trace and get phone numbers and things. I don't know. I haven't done that for a divorce, but it could be an effective way to get business. But you can see where those listings are going to be on the market with that data. Because a divorce is either a sale typically, or they're going to transfer title in which they need to refinance. Another effective way, of course, is divorce attorneys. I know divorce attorneys that just swear by certain realtors, and that's again a life circumstance. They sell homes whether rates are at 10% or 1%. Sellers moving out of the Bay Area is up 26% in 2022 compared to 2019. So this is still a very viable, and it's up 16% year over year. But 26% compared to 2019 is people moving out of the Bay Area. And so this is a demographic that is still out there. We're wanting to move to Exurbia, get some dirt, some trees, and whatnot. Go to Idaho, etc. And these moves are on the rise. Nationwide moves, excuse me, jumped 15% back in 2020, and it huge, as we know, San Francisco, Los Angeles, and New York are pretty much the three main epicenters, right, of people leaving. So one way to drum up this type of business, I know people who go after larger companies, like, in even your just local, even Lawrence Berkeley or something like that. They have people that move, and so going in with their HR companies, etc., or else people who relocate a lot. I know going after HRs and executives and whatnot in order to capture that kind of relocation business. Um, There's military, there's relocation companies as well that you can market to. I said old school canvassing and garage sales, like get nosy when you're looking at people's, the junk they're trying to sell and see what their motivation is. But those are some of the tactics. I mean, really, also just keeping in touch with your database, because this is kind of anyone who owns a home could be moving out of the Bay Area. Next, we're going to look at sellers looking to downsize. So these are the baby boomers, and they are 57 to 75 years of age. And they also make up about 42% of all home sellers today. So it's like half of the market is baby boomers, or very close to it. Reasons why people move, of course, are maintenance of a larger property, moving closer to friends, empty nesters, a fixed budget, too much space, all that good stuff. As far as the opportunity here, these people, the highest homeownership rate is for those 65 and over. The highest rate of homeowners, excuse me, is those people aged 65 and over. So huge demographic for listings. Now, of course, most of the things to think about here, they've owned multiple homes before, so they are familiar with the sales process. Financial advisors, retirement special financial advisors are just great sources of business, regardless of any of these. Maybe not the first time home buyers, but everyone else, like, it is a good source of business for you. So it is good to meet and buddy up with as many financial advisors as you can, I'd say. Retirement specialists and even reverse mortgage lenders. I've done reverse mortgages, and then unfortunately that person does pass away, and then there is a listing after that. So it is out there. And while a tactile approach may seem ideal, baby boomers are on Facebook. My aunts and uncles are all over Facebook. So I mean, a Facebook ad campaign, doing a live something like this towards that demographic on Facebook may not be a bad idea. So those are some considerations for you, as far as getting that business. Now we're going to go into our final here, and then we'll wrap it up. But trust and probates, this is coming out. This is going to be a bigger section of business too. Keep in mind, not to be totally morbid, but as baby boomers sell and move on, they also pass away. So, as being a big demographic of homeowners, this is another way those are going to come to the market. Um, and I will say, trust, if you don't know, is someone who's inherited a property from a friend or a relative. And if they're not selling and they're keeping the property, there's usually a transfer of title. And I'm just going to throw out a quick plug here that I have saved so many deals because lenders don't know what they're doing. They call it a cash out refinance. You need to wait 6 months. You have to pay the cash out fee and all this stuff. And it is not true. It's a transfer of title. I've seen most of these I've even submitted get suspended, but then I get them approved because I just look at the suspense conditions and fight them. So anyway, just know, if you have a client in a trust and they decide to refi, not sell, you should send them to someone like myself, not like a big bank. How does it work? The probate process transfers these assets to heirs or beneficiaries, excuse me, but either because they live out of state, want the money is the real reason, right? Most of the time, we don't. They want to sell the property rather than keep the property. And the opportunities here, well, we do have very motivated sellers. However, we can run into sticky situations, satisfying heirs, and things of that nature. And so, no, there's like a different type of payoff to different parties too when you're listing these properties. There can be marketing considerations. So I didn't come up with this. It was my buddy Jeremiah who does my data stuff. But obituaries, I like to just pass that off because it's such a morbid way to get leads, right? Um, but it may seem morbid, but reviewing local obituaries will help you identify future probate leads. Estate planners and probate attorneys can also help you find leads. Court records, similar to the divorce, you can get public records and you can see, who's passed away, et cetera, and who's filed for probate. And lastly, letter campaigns to these people's, similar to divorce. If you get like a letter campaign like that, and it's like more of the helpful approach than the sales approach, I think you can generate a decent amount of business. Just make sure you're consistent with all this stuff. First of all, nothing happens once, right? You got to do it a bunch of times. So I'm closing out here. I hope you did enjoy this. If you have any comments, let me know. I don't see any. But know this too, as far as a mortgage broker and why I believe that the power of an independent mortgage broker is king. Why I know that is because we have multiple lenders. We shop rates on the day they're accepted. So if your offer got accepted today, I'd shop the rates today. And if XYZ Bank is lower and can close on time and get a better rate for the client than, ABC Bank, then that's where we go. But if you're with a retail bank and your client's stuck at that retail bank and their rates aren't that best that day and the guy down the street's better, yeah, there's a whole process that goes along with resubmitting that loan if that's what they decide to do to get the lower rate, et cetera. I just have it anyway. We can transfer appraisals. So instead of having a deal die, I can use a dead deal's appraisal to rejuvenate the deal. I can also move an appraisal if like there's some guideline that happened or something funky happened and we need to resubmit the loan to a different lender. We don't need a new appraisal. I use the same appraisal. You go to anyone else, they need a new appraisal on the retail side, more than likely. And we have lower rates than retail. I can tell you I'm usually 0.375 lower in rate right now than my competition on a 30-year. on any given day. But jumbo, all that stuff. I mean, we've got the product and we can structure it, self-employed, all that stuff. We know what we're doing. We're not going to throw your self-employed people away. We shop turn times the day of acceptance. So if we've got an 18-day close, and this isn't going to happen today because everyone's slow, but 2 years ago, you really needed to know if you had an 18-day close on a purchase and there's 500 refis in the system. It's a challenge, and you got to really stay on top of those because some lenders, they're just like, it's closing in 35 days. Too bad about your 18-day close. I don't care, but you care, and I care, and the clients care. So we got to make it happen. Um, More products: reverse mortgage, bank statement loans, home equity lines of credit, pretty much kind of anything. If I don't have it in my wheelhouse, I can do the research for you and figure out how to get it done. And we have lower mortgage insurance. This is key. Like if your client needs mortgage insurance anyway, then we have lower conventional mortgage insurance. Last time I compared it to someone else, I was $200 a month lower in mortgage insurance. $200 a month. So if you need mortgage insurance, you don't have a lot of money, and $200 a month on throwing it away on mortgage insurance is a pretty big deal, and that's what this retail outfit was charging. So just know that, I know you got your own lenders and everything out there, some of you, but if you should also have an independent broker that knows what they're doing, like myself, president, CEO of Fresh Home Loan, in your back pocket. So I'm Garrick Wordmuller, and I really do thank you for watching this, and I will talk to you soon.